Breaking right now, 2 days after what many agree is the most consequential election in a generation, the FOMC will make a decision on interest rates that's less than a minute away. More importantly, Jay Powell will have to navigate questions about the timing and size of that last rate cut, because this is what's happened. The 10-year yield has gone through the moon. It was supposed to go down. Instead, it's going up. The economic surprises, they won't stop going up. They also were supposed to go down, right? Wall Street thought maybe things are going to get a lot worse. Instead, there's been a string of positive surprises, one after another. Does Jay Powell have a handle on this economy? And then also we have this. Core CPI, inflation, it's drifting lower, but still, it's nowhere near where they said it would be. Have they assumed that maybe the wrong thing? So here's the thing, folks. Buckle up, because I can tell you right now, there's a ton of confusion out there. Let's go down to Washington, D.C. Edward Lawrence, he's got the call for you right now.
Now, the Federal Reserve has cut interest rates 0.25% to 25 basis points of federal funds rate, now between 4.5 and 4.75, and that should bring down mortgages slightly and auto loans be a little bit cheaper. The Fed statement says the economy expanded at a solid pace, and then added, since earlier this year, labor conditions have generally eased. Now, they also note that the unemployment rate has moved up a little bit, but still remains low. The Fed says inflation made progress towards its 2% target, but remains somewhat elevated. Now, on the risk to the economy, the Federal Reserve members say the risk to achievement in their employment and inflation goals are roughly in balance. It is not, or in a nod to a lower inflation rate, the Federal Reserve dropped the language that inflation has substantially moved towards the 2% target. So overall, 2%, the PCE inflation is around that 2% already. Now, the Federal Reserve continue to reduce the balance sheet at a preset course. The Fed says that the economic outlook is uncertain, and it will assess, obviously, on data that they're getting, market conditions, and inflation expectations on any further rate movements in this. But again, 1/4 point here for the Federal Reserve. We will listen at the 2:30 Eastern Time for Federal Reserve Chairman Jay Powell and his tone as to how the rate cuts will continue after this. Back to you, Charles.
Great point, because I think he may be defensive. We'll find out. Thanks so much, Edward. In 1814, Russian poet and fabulist Ivan Krylov, he penned a one-page fable, right? He wrote fables. It was entitled The Inquisitive Man, about a man who goes inside a museum and he notices all the animals except the elephant. Hence the phrase, the elephant in the room. And, well, that's what will be looming very, very large today in this Federal Reserve meeting. When Jay Powell starts to take those questions in about 30 minutes, considering the margin of victory for President-elect Trump, in fact, it's more like King Kong in the room, right? And he's casting a dark and foreboding shadow. Trump obviously has been no fan of the Federal Reserve and its immense powers. He also believes that the executive branch should have a seat at the table. The good thing is, he says, listen, he doesn't care about firing Jay Powell, but he wants to be a part of the process somehow. Meanwhile, Powell's dilemma, it began long before Tuesday's election, right? Some actually believe it began when they began hiking rates, right? Remember, they began hiking rates right here, and all of a sudden, where'd the GDP go? The GDP has gone up. We thought it would go down. Oh, and consumer spending, same sort of thing, right? Same thing. They start hiking rates, and consumer spending got stronger, and it really has stayed relatively strong. So people are wondering, maybe, just maybe, the Fed has misjudged variable lags, or maybe they just simply have lost control.